Hey guys, welcome back to another Bitcoin update. It's been a couple of days since I last put up a video, so got a couple of things to talk about since last time. Let's go zoom in on, like, say, the hourly chart. We know we've got this descending broadening wedge or channel type situation. We're still in it, very much so. But the last few hours, even just the last few hours, we've been correcting somewhat. Now, remember, I had put in some dotted lines to depict some of the major pivot points from the past, like from the past price action. So here's the one that we're sort of coming up on at the moment and testing. That's the pivot from the 2nd of May, and it is at a price level of about 56,500 or so. To give you an exact number, it's 56, let me see, 1 second, I'll read it out. 56,552. So 56,550, I'm pretty sure we've come down and tested that now, almost to the dollar. But if that does break, if we fail that and come down further, then we're possibly looking at the next major pivot, this one here. And that price level is about 53,485. So 53,500. So we got 53,500 and we've got 56,500. Now, this channel that I drew in the previous video has since been invalidated. It's been completely left. We've left that channel now. I'm going to delete that for now. And same with this line here. That was the rising wedge at the time. Something like that. We had a rising wedge situation, which we textbook fell out of. And now we're coming down and we're working on some other pattern right now. But the first thing I wanted to touch on was a Fibonacci retracement. Now, what I might do is hide this channel as well, this yellow channel. That was something we were dealing with back here. We were like, okay, this may produce, some kind of support and we'll take off, but that's been invalidated as well. So I may as well delete that, that bottom line there. But this line is still relevant because we've still got a high. But okay, let's go back to retracement. What are our Fibonacci retracement levels? So we'll go from low to high here, and we're approaching the 0.5 Fibonacci level, which is 55.8. So it's a little bit beyond that first checkpoint, but it's not too far away. We may get that in the next couple of hours, and it could produce a potential bounce. If that does not bounce at the 0.5, we've got the golden pocket, which sits between the 0.618 and the 0.65, which is, lo and behold, just above. If we got a deep test of the golden pocket, that may be enough to just test that 53.5 level that I was talking about just earlier. So a couple of possible bounce points. That is the whole point of retracements, or looking at Fibonacci retracements, is to see where the most common points of action lie and where you may get some kind of a reaction off those levels. So we'll see how that goes. By the next video update, we'll know which level caused the bounce, if at all. So we'll cover that. I'll leave this Fibonacci tool on there until the next video. Now, from a trend perspective, we do have a couple of trends going on at the moment. There seems to be a new parallel happening, potentially. Let's trace it out. I have not drawn this yet. I just see it. But I'm thinking it's something like this. Trying to incorporate as much of the action as possible. Let's just start with this point here and then we can adjust it afterwards. So it's not quite that shallow. I think it would be a bit steeper. So perhaps it goes to this point here. And then if you lock that onto this point, this lines up so far. Given more information, given more data, we may adjust this again later down the track, but for now, I feel like that's what we're dealing with at the moment. Brighten these lines up a little, but so far the structure, the market structure, this is something I've touched on in previous videos. If we pick out the pivots of the current run on the 1 hour chart, you can see that we did get a series of higher highs and higher lows. However, that structure got broken once we got down through this level here, the 59.5 level, 59,500. And that changed the character of what was an uptrend back here is now a downtrend technically. So much the same as what's happening on a higher time frame, isn't it? Like we had an uptrend which has now come down. If we go out to the daily, you can see that repeated, or you see that reflected. We had an uptrend, the structure broke to the downside. So let me go back. So zoom out a little. So structures to the downside, well, and we're coming in to test lows, I believe. I think these lows here, also just from a market structure perspective, not Fibonacci or price level, but these lows, which I'll give you a price in a second, could be another major testing point. We see we haven't really been able to keep the SR flip idea going, which was initially we did, if you notice. This was resistance here, and it did provide support a couple of times here. So that was an SR level. We've since lost that SR level just a little bit, not too far, but we have. And now we may come and test, other key levels. Now that level, I said I'd give you a price. Let me follow through with that. It's about 54,500-ish is that level. So I think that pretty much covers what I wanted to talk about. We're still, I think macro, even after all of this selling, we still haven't changed any of the sentiment, I don't think. I think just quickly looking across to the S&P 500, that had a really good day. So that's bullish there. You can see it gapped up and it's back on top of that yellow trend line, which if I zoom out, you can see where that came from. That came from last year even. October of last year is when we got the first pivot. And then we got more testing here of it. And we did lose it for a number of days, but now we're trying to reclaim it. So we'll see if the stock market can get back on track. But that is, I feel like that's a bullish headwind. That is a bullish sign. CPI came in recently. The forecast, the expectation was 3%. It got a 2.9, so that's better than expected, just slightly. So that's good. This is the first time we've been in the 2% level for the interest rate. The inflation rate. And just very briefly looking, before I wrap it up, let's look across to the calendar, Forex calendar. And we'll go this month, and we'll see what's coming up. So we've just had CPI. Some more figures came in, unemployment claims, core retail sales. There's a meeting minutes, FOMC meeting minutes, later in the month. But other than that, we've got a GDP reading, preliminary. But yeah, the rest of this month shouldn't be too. I think the bulk of what is important, the funds rate and the CPI, those are the two higher impact kind of events for the month. They've already come and gone. So next month though, so September we have, of course, CPI again, and then the funds rate after that, which is the 19th. So those couple of things may cause some action after they come out. So, all right. Well, I think that pretty much catches us up with where we're at. And thanks for tuning in. Remember to hit like, subscribe, leave a comment, and I'll see you in the next one.